Hello everybody and welcome back to my YouTube channel. I am so excited to have you here with me today. If you are new here, then welcome. My name is Rachel and I am a disruptor in the accounting world. It is my mission to disrupt what being an accountant looks like, what having an accountant feels like, and what it means to own your own accountancy practice. In today's video, I'm going to be explaining all things dividends. How you can calculate how much money you can withdraw from your limited company as a dividend, what dividends actually are, when you pay tax on dividends, how tax on dividends works, and when and how you can withdraw dividends from your company. So if your business is set up as a limited company, paying yourself dividends alongside a salary is usually the most tax efficient way to draw money out of your company. To help you to manage the legal requirements of paying yourself from your business, in this video I'm going to explain how often you can take dividends and exactly how that process works. If you'd like to learn more about the different ways of paying yourself as a business owner, you can check out this video, which explains how to pay yourself as a business owner. I run through what that looks like for you as a sole trader and what that looks like as a limited company. Making money is literally the reason most people build and grow their own businesses, and so it's my job to make sure that you understand how and why you are paying yourself as a business owner. So first up, let's look at what is a dividend. This is a question that you might be too scared to ask your accountant, so don't worry, I am here to help. A dividend is the payment of a portion of a company's profit, and it is paid to its shareholders. So this works for small business owners in the same ways that it does for the biggest companies you can think of. Profit is essentially what is left over within your business once all of the taxes, expenses, and liabilities have been paid. It's also called retained profit, and this is the leftover money that might accumulate over time. So next up, I'm going to talk about dividends and profits and how they work together. So limited company dividends represent the amount of money that's available in the company to pay the shareholders from retained profit after paying corporation tax and other liabilities. Retained profits can consist of the current year's profit together with any profit that you've not used in earlier years. So, for example, if a small business makes a profit of £15,000 in its current year, but has profit left over from years before of £4,500, a pool of £19,500 is actually available for dividends or other purposes. It's really good business practice to keep part of your retained profit in the bank, in the business, not as dividends, in order to cover any future contingencies, plans that you've got for the business, or to reinvest that cash into the business to support future growth. The balance is then available for dividend payments, and the amount available for dividends is also referred to as distributable profits. Next up, I'm going to be talking about declaring a dividend. So before paying any dividends from a limited company, the directors must take a formal decision at a board meeting to declare a dividend. This process is mandatory, and even if the company only has one director, the decision must be recorded in minutes of the meeting and communicated to all shareholders. For some people, this is a very formal process of literally having a board meeting and making minutes. For other people who maybe you are the sole director, that's something that your accountant can help you with throughout the year. A company can declare a dividend at any time of the year, so timing is not tied to the financial year, and the company can make several dividend declarations during the year. Timing and the frequency are only limited by the availability of funds to pay the dividend, which I just explained. Typically, limited companies make annual dividend declarations, although they could choose to make withdrawals of dividends every 6 months or quarterly so that shareholders are aware of any upcoming dividends. Limited companies must not declare a dividend if there are insufficient funds in retained profits, which is what I was referring to earlier in distributable funds. So when can my company pay a dividend? Great question. So there aren't any hard and fast rules about how frequently you can pay yourself a dividend. You can basically pay yourself or your shareholders whenever you like. That being said, regularly taking ad hoc payments at random points throughout the year can sometimes indicate that there are issues with the way that the funds within your business are being managed. So most businesses distribute dividends quarterly, every 6 months or annually after working out what profits are left over. The timing of dividends payments may affect how much tax you pay. So for many businesses, particularly in the wake of the pandemic, profits can vary very dramatically from one year to the next. In a particularly profitable year, you might take a tactical approach to paying dividends to pad out leaner times, and this can also produce a more even income pattern, which makes your personal financial tax planning much less stressful and can even help you to avoid paying higher rate taxes. And this is something that an accountant can help you with. So for example, if your company generates profits of £50,000 in year 1 and £10,000 in year 2, your company profits will be £60,000 over the 2 years. And rather than paying a very large dividend in 1 year and a very small dividend in the next, you might decide to declare dividends of £30,000 per year. This means you'll have a more regular income, and if all of your income is from these dividend payments, then you will be under the threshold for basic rate tax in each year. Next up, I'm going to be talking about when do I pay tax on dividend payments. So unlike a salary, dividends aren't taxed at source, so you'll need to declare them as part of your self-assessment tax return. Any tax that's due on dividends normally needs paying to HMRC by the January following the end of the tax year during which the dividend was paid. If a dividend was paid in late of March 2022, the tax on that would be due in January of 2023. A dividend paid in late of April 2022 falls into the following tax year, so that tax wouldn't be paid until January 2024, though you can submit your tax return much earlier than that, and I would definitely recommend that you do that. So how does tax on dividends really work? Dividends come from the company's after-tax profit, so the company doesn't pay tax in respect of any dividend payments it makes. The shareholders that receive a dividend will need to declare it on a self-assessment tax return and pay tax accordingly. Business owners that operate as a limited company tend to pay themselves through a combination of a regular salary and dividend payments to be more tax efficient. The most tax efficient salary for a company director depends on how many of you there are in the business. Next up, I'm going to be talking about the tax-free dividend allowance. So you are able to earn a maximum of £2,000 in dividends in the 21-22 and 22-23 tax years before any income tax is due. This is in addition to your personal tax-free allowance of £12,570 in the 21-22 and 22-23 tax year. So, what are the dividend tax rates and thresholds for the 22-23 tax year? Essentially, once your £2,000 tax-free dividend allowance and your personal allowance have been used up, any other dividends that you receive will be taxed regardless of their source. How much personal tax you'll need to pay on income from dividends depends on your tax band. These rates aren't as high as income tax rates for dividends, which is what makes dividends so tax efficient. So, today we have covered all things dividends. How you can calculate how much money you can withdraw from your limited company as a dividend, what dividends actually are, when you pay tax on dividends, how tax on dividends works, and when you can withdraw dividends. I'm excited not to have to say the word dividends again for another 7 working days because I've just word vomited it too much. I so hope you have found this video useful and it makes your business finances come to life. If you found this video because you are on the lookout for an accountant, you can use the link in the description to this video to book some time straight into my diary to chat. Thank you so much for joining me today, and I hope to see you again very soon.